It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be looking at gap trading strategies. 8 strategies for playing the gaps between one day's closing price and the following day's opening price. Without further ado, let's begin. There are 4 types of gaps: a full gap up, a full gap down, a partial gap up, and a partial gap down. A full gap occurs when the opening price is greater than the previous day's high. A full gap down occurs when the stock's opening price is lower than the previous day's low. A partial gap up occurs when the opening price is higher than the previous day's close, but not higher than the previous day's high. And a partial gap down is when a stock's opening price is lower than the previous day's close, but not lower than the previous day's low. Let's take a look at some examples. This is an example of a full gap up. There are actually 2 full gaps up here, but we're concerning ourselves with the first one because that's the first one that gave us the signal to enter the trade. Notice how the top of the previous candlestick, the one before the first full gap up, the previous day's high, is lower than the opening price of the next day's candlestick, which is the lower horizontal line. This is a full gap up. Now we're going to do the most opposite type of gap here as another example. This is an example of a partial gap down. In this example, the stock opens lower than the previous day's close, but not lower than the previous day's low. The opening price here is the left horizontal line, which is clearly above the lowest point on the previous black bar. This is a partial gap down. Now we've looked at full and partial gaps both up and down. Now let's look at some strategies. In general, you should identify gaps early in the trading day and then give the stocks an hour to develop a trading range. From there, you can come in at 10:30 a.m. Eastern Time after the first hour of trading and try to make a momentum play. There are 4 total kinds of gaps: full up, full down, up, partial down. And each can be played with a long, that is buy, or short, that is short selling strategy. And all that works out to 8 total strategies. Let's look at the 4 full gap strategies first. When a stock makes a full gap up, you can either go long, buy it, or short sell it. Obviously, you want to determine whether the gap up was the first portion of a new uptrend or an overreaction that will soon see a correction. Your best bet in making this determination is to watch the first hour of trading and see if the stock is headed higher or lower. Is it showing strength or weakness? If you want to enter the position on the long side, come in at 10:30 a.m. Eastern or thereabout and set a buy order 1 to 2 ticks above the highest point the stock has hit in the first hour of trading. This is a momentum play. Use a rolling stop loss of -8% as your only price target. In this example, Cisco, ticker CSCO, gapped up on May 30, the day after Memorial Day 2000. On the previous trading day, the stock had hit a high of 55.94. On May 30, it opened at 57.48, higher than the previous day's high, thus making a full gap up. In the first hour of trading, Cisco looked strong. So if you came in at 10:30 and entered after 2 upticks, your entry price would be about 57.70. Immediately, you'd set your stop loss at -8% or 53.08. But when the stock closed that day at 59.88, you'd have to move your stop loss up to 8% lower than the new high. Again and again, you'd have to adjust your stop loss so that you'd never fall back more than 8% from the highest point the stock reached while you held it. Ultimately, this would run all the way to June 20, when Cisco hit a high of 69.56, setting the stop loss to 63.99. 3 days later, Cisco fell to 63.99, which, after the 57.70 entry price, would have provided a pretty low risk profit of 10.9% in just 3 weeks. Annualized, this would work out to a profit of about 283%. Again, with pretty low risk. Not bad, huh? If the stock gaps up, but shows weakness in the first hour, then a short sale may be the best action here. Here you'd set your entry price at 1 or 2 ticks below the first hour's low and then use a 4% rolling stop loss. A full gap down long strategy is best for stocks that gap down in the first hour but show strength and should work just as full gap ups. A full gap down short strategy works just as a full gap up short strategy with a 4% rolling stop loss. But seek to capitalize on stocks that gap down in the first hour and are headed even lower. Partial gap strategies work essentially like the full gap strategies, but with a little added risk. Partial gaps are not as strong as full gaps. However, the advantage of playing a partial gap strategy is that partial gaps often lead to full gaps, such as in this example. Here, Earthlink had a partial gap up showing strength. If you entered prior to the full gap up, which came the very next day, you'd have a much more advantageous and profitable entry point. In conclusion, gap strategies are an easy way to do some momentum investing. With rolling stop losses, the downside is pretty limited, while the upside is limitless. Full gaps are a safer bet, but partial gaps provide more profit potential. In all cases, though, the first hour of trading is key. Be watchful of the way the stock seems to be headed, as this is the key to successful implementation of any gap trading strategy. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.